Stocks trade with some gains, but the street remains wary of a possible escalation of the Gaza conflict. Utilities and consumption lead gains, while realty and capital goods drag.
HDFC Bank misses expectations on net interest income but scores on profitability. The management exudes confidence about the future trajectory, but analysts temper expectations even as most have a buy on the stock.
Grasim plans to raise 4,000 crores via rights issue to repay debt and fund growth as it chases its pain's ambition. The promoters promise to subscribe to their entitlement as well as any unsubscribed portion of the offer.
CEAT turns in a good show as lower material prices and a better product mix aids margins. The street takes this as a cue, driving up other tyre stocks.
And India's chief economic advisor tells CNBC TV18 that money for private capex is getting invested on the ground and India's economy is doing well. Though global factors could have some impact, he also accedes that the slowdown in affordable housing deserves a look.
A very good afternoon. You're watching Halftime Report on CNBC TV18. I'm Ekta Batra, with me Sonia Shenoy as well as Manglam Malu. Well, it's turning out to be a session where, we are building on gains. The global cues have helped us overnight. We have the Nifty, which is above 19,800, and earnings continue to be in focus. So no trouble really coming in, no signs of any kind of, conflict coming in for our markets as of now.
Nothing as of now, all guns blazing as we can see on the top of the screen, all four indices doing extremely well. The only question is, are we running into some sort of resistance? And if yes, can we break past that? Because if we do, then, you go to the 20,000 mark and a fresh all-time high thereafter. But the only thing that we have to navigate is the current near-term resistance that we may face.
Oh, absolutely. And I think, when we started off trade, we were making this point about how the market is well placed today to move to higher levels because of global cues being good, because of the Nifty Bank charging ahead on the back of HDFC Bank's numbers. Of course, Bajaj Finance, etc. will be in focus in the rest of the day. But the mid-cap space is really the one that's firing away. So let's get straight to that. CEAT is surging on the back of very strong numbers that the company reported this time around. It's really the margin performance that the company has, clocked in this time. There's a 230 basis points up move that we're seeing quarter on quarter in the margins, in the gross margins that is. And that's because of a better product mix that CEAT has reported as well as a lower raw material costs. Even on the top line, if you look at it, the top line growth is not too much, about 5.5%, but the real performance has come in on the back of the operational growth that we've seen. Also, the cash on the books of the business has been very strong. In the first half of the year, the cash that they've reported is much higher than what they did same time last year. And there is a positive read-through coming in, for the other tyre stocks. And hence, all of these tyre stocks are up and about today. But HDFC Bank is the other one, reported a mixed set of second quarter earnings yesterday. We have Abhishek joining in to give us the latest on that. It missed expectations on net interest income. It scored on profitability. Do note this is the first quarterly earnings after the merger with HDFC. Let's first listen into excerpts from HDFC Bank's MD and CEO during the earnings conference call.